Welcome, ladies and gentlemen, to Timing the Market for Friday, May 8th, 2015. This is Dan Mish, your Director of Retirement Services for VectorVest. I will take us through today's market recap. Let's get right into the program. Well, from the moment they rang the bell this morning, the markets took off, and you can see that the Dow, NASDAQ, the S&P, and our own VectorVest composite all had a big rise today. And with that, in the top center of your screen, you see the market timing gauge finished 2 ticks into the green. That means the color guard is somewhat bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. Those 2 ticks into the green come from the color guard down below. Beginning with the price column, which you can see finished at $38.98. That's the price of the VectorVest composite, which is currently tracking 8,129 stocks. That composite price rose higher than it closed yesterday, and also rose over and above where it closed 1 week ago. Therefore, it signaled that green light. And with that week-over-week price rise, the primary wave of the market has changed from down to up, and if you look over in the trend column, you'll see that first position signaling an up. The yellow light we got today comes from the relative timing, which tracks the short-term price trend of that overall composite. Now, it did rise day over day, but finished even week over week and is below its neutral line of 1.0, giving us that yellow light. And the second green light came from the buy-to-sell ratio, which moved back up above its neutral line of 1, indicating we now have more buys than sells in that overall database. It finished at 1.08, which is higher than Thursday's close, but just a little bit lower than 1 week ago. And the column next to the BSR, the MTI, which combines price, RT, and buy-to-sell ratio into 1, it tells a similar story. It did rise today up to 0.98. It's still down below its neutral line of 1.0, and that is also lower than 1 week ago. And since that MTI is below 1.0, that second position of the trend column is still signaling a down as of today. As well, the call column says the confirmed down, which was issued on Wednesday the 6th, still stands. And for further confirmation of that, let's move over into the Graphs tab. Here we have the price of the VectorVest composite with the MTI, BSR, and RT plotted down below, and this is a 1-year graph. I'll change us over to the most recent 6 months, and we can turn on the confirmed calls and see the confirmed up lasted from 4.9 until 5.6, and then the confirmed down we're in right now again was issued on Wednesday. For some technical analysis, let's move over to the Enhanced Pro Trader timing graph. And really what we do here is surround the price of the VectorVest composite with some technical indicators. There are upper and lower envelopes surrounding the price. The white line intersecting the price is a 30-day weighted moving average. And down below we have a DPO and a MACD. So you can see today's closing price of $38.98 is down below that 30-day weighted moving average, which finished at 39.05. The detrended price oscillator is in negative territory below its neutral line of 0, finishing at minus 0.06. And the MACD is down below the signal line, and that leaves the histogram negative as well. In this graph layout, we'll toggle on the DEW signal and see that we went into a DEW down on April 30th. And we did not finish with a green or red light in the price column today, so we don't need to consult the GLB RT kicker graph. So with that, let's move over into the views. And as always on Friday, at the top of the views, you will get the phone numbers and email addresses if you have any questions or concerns about VectorVest. Just below there, we list all of our upcoming live events, and you can see we have quite a few of them scheduled for you. If you're near one of these cities, you can click on the links to the left to find out more about the event and the links to the right to register. Moving down to the market in review, it says that Wall Street began the week with a modest win as investor sentiment got a boost from an upbeat factory orders report and a handful of better than expected earnings results. The Dow and S&P 500 added slightly while the Nasdaq rose as well. Stock prices plummeted Tuesday as oil prices continued to rise and the U.S. trade deficit hit a 6-year high. The Dow fell 0.8%, the S&P 500 plunged 1.2%, and the Nasdaq plummeted 1.6%. Rising crude prices, a poor private sector jobs report, and comments from Fed Chair Janet Yellen that stock prices were quite high sent the major indices further into the red midweek, with the Dow and S&P losing 0.5% and the Nasdaq dropping 0.4%. The major indexes recovered most of the previous day's losses Thursday and muted trading a day ahead of the highly anticipated non-farm payrolls report. The Dow and the Nasdaq both added 0.5%, and the S&P picked up 0.4%. The addition of 223,000 jobs was all the news investors needed to buy stocks Friday, as it was just enough to signal continued growth, but not enough to warrant an interest rate hike next month. The Dow soared 1.5%, the S&P climbed 1.4%, and the Nasdaq rose 1.2%. Overall, the major indices were mixed for the week, with the Dow and S&P managing a slight gain while the Nasdaq fell modestly. And for his essay tonight, Dr. DeLito is giving us some petroleum sector updates. He says, "In my essay of 12.5 of 14, I said, I hear a lot of talk about buying petroleum stocks at current bargain prices, but I wouldn't touch them until the business sector RT starts moving higher. 2 weeks later, I received an email asking when to buy energy stocks. I addressed the subject in my essay of 12.19 of 14 by describing how you could follow petroleum sector performance by tracking RT ranking, by tracking industry group rotation using the 5-day RT delta search in the Unisearch tool, which Mr. D'Ambrosio demonstrated in his December 12, 2014 special presentation, and by seeing what individual petroleum stocks were doing via the real-time Derby results. In all cases, it was clear that petroleum stocks were rebounding. In my essay of December 26, 2014, called A Better Way to Buy Oil Stocks, I wrote about 5 oil stocks to buy now, which were featured on the December 22nd cover of Barron's magazine. While I did not buy any of these stocks, I did sell 10 SLB January 15, 2016 $90 puts at $12.37. Schlumberger is currently trading at about $92 per share, and the puts are worth $6.80 per share. We created a watch list of the 5 stocks Barron's featured called Barron's Oil Stocks and put it into the Overview Watch List folder. A quick test from December 22nd to today's date of May 8th shows that the 5 stocks are down an average of 1.98%, with 1 winner and 4 losers. SLB was the winner, up 5.7% as of 12:54 today. My gain on the SLB puts I sold was $12,370 minus $6,800, or $5,570. The following week, in January, I wrote another essay and called it An Even Better Way to Buy Oil Stocks. I explained what I meant and also said that I sold 10 SLB 90 January 15, 2016 calls at $7.44, creating a short straddle. This move gave me $19.81 to play with. As of 1:30, the calls were worth $7.73 per share, so I'm down 29 cents a share, or $290 on the short calls. On January 30th, I wrote another essay on the petroleum sector in which I noted that since December 5th, when I wrote my first essay on the petroleum sector, its RT ranking had improved by only one spot, from 41st to 40th place. But I said you can't ignore the sector. It's huge and it's fixing to rally. How do I know? Just look at its graph. The one-year daily graph shows that its RT hit bottom on 12/15, one day before its price hit its lowest intraday low of the year. Then it rallied. The price faltered and price hit a lower intraday low on January 14th. However, RT hit a higher low on that day. This constituted a bullish divergence which cannot be ignored. On February 6th, I said it was time to buy some petroleum stocks. Sure enough, the sector rallied to a higher high on February 17th, then fell to a higher low on March 16th. RT also hit a higher low on the 16th. It was a textbook pattern of a rally. From February 6th to April 30th, the price of the petroleum sector rose from $25.24 to $26.29, or just a little over 4%. It has pulled back to $25.69 so far this month, and the rally may be over for now. But the RT ranking of the petroleum sector is currently in 8th place, a far cry from where it was on December 5th. Although the RT of the petroleum sector is still above 1.0, I'd be very careful about buying petroleum stocks. It's a rough and tumble business, and many of the smaller companies won't be around in a few years. As for the big companies, they have problems of their own. One of them being that the threat of climate change could mean that some of their reserves, for which they've spent billions of dollars, may never be produced. Given these issues, buy petroleum stocks only when its sector RT ranking is improving. And with that happy note, I will continue to give you petroleum sector updates. Moving down into the timing section, you can review what we covered from the home page, where the price of the VVC and the RT and the BSR and the MTI finished day over day and week over week. In summary, tonight it reads, with 2 green lights and 1 yellow light, the color guard is somewhat bullish. With the price of the VVC moving higher on a week-to-week basis and the MTI below 1.0, we have an up-down situation. And finally this evening, down in the strategy section, it reads that the price of the VectorVest composite gained 5 cents per share since last Friday to end the week at $38.99. The choppy pattern of a slowly rising wedge formation was evident again this week, as the primary wave is up today, only 2 days after we received a confirmed down on Wednesday. The size of today's rally, 35 cents per share, suggests to me that traders were fearing an excessively strong jobs report and got a number, 223,000, that they liked, which was neither too strong nor too weak. Nevertheless, our key market timing indicators remain somewhat neutral. The green light in today's price column of the color guard was not confirmed by the RT kicker. The RT is unfavorable at 0.98. The BSR is favorable in green but not robust at 1.08, and the MTI is unfavorable at 0.98. So we shouldn't get too excited by today's rally. With 2 green lights and an up-down situation, the color guard is somewhat bullish. Prudent investors may buy rising stocks only when the market is rising. Aggressive investors and traders should play the market with a bias to the upside. And our Derby leaders down below will show that bias. Over the past 1 day and the past 5 days, we have all bullish strategies with gains in the 2 to 5% range. This week's strategy of the week is called How to Become a Confident Investor. Why are confident investors more successful? That was the subject line of an email I got from an advisory firm this week. While I didn't agree with everything in the email, I did agree with the premise. In tonight's special presentation, you'll discover 3 key principles that make up every confident investor, the most common traps which shake your confidence, 3 steps to take right now to increase your confidence, and how one thing can set you up for success. If you struggle with a lack of confidence, be sure to watch tonight's special presentation titled How to Become a Confident Investor. We will have our live question and answer webcast on Monday the 11th at 2 o'clock p.m. Eastern. And you can click the first link for registration on that and click the second link to see the fantastic presentation. Thank you for joining us this week.